Good morning. At 10:45 a.m. Japanese Standard Time, the Nikkei 225 is trading at 53,970, up 220 points, plus 0.41% from yesterday's close. While the initial peace plan euphoria that drove Wednesday's 2.9% surge remains the primary driver, the index is struggling to punch through the 54,000 psychological resistance level. Traders in Kabutocho are closely mirroring the late-session momentum from Wall Street, but the risk-on sentiment is being tempered by a weakening yen. The USD JPY has climbed to 159.45, nearing the critical 160 level. While a weaker yen typically boosts Japanese exporters like Toyota, plus 2.1%, it is intensifying the local energy cost crisis, as Japan remains almost entirely dependent on fuel imports passing through the contested Strait of Hormuz. The ARM-Mania that ignited New York yesterday has hit Tokyo's tech sector with full force. SoftBank Group, which owns a majority stake in ARM, is the session's volume leader, trading up 3.5% as investors reprice the value of their AI portfolio following the AGI CPU reveal. Tokyo Electron and Advantest are following suit, gaining 2.2% and 1.8% respectively, as the market anticipates a massive shift in the semiconductor supply chain toward native AI hardware. Meanwhile, the financial sector is seeing a renewed bid. Mitsubishi UFJ and Sumitomo Mitsui are up over 2% as the 10-year JGB yield edges higher, signaling that the Bank of Japan may be forced into a hawkish stance to defend the yen if the Middle East crisis keeps energy costs elevated. The geopolitical clock is now the only metric that matters. We are entering the final 36 hours of the 120-hour postponement. In Tokyo, the atmosphere is heavy with skepticism, despite the green screens. Reports of the Israeli naval strike in the Caspian Sea and Tehran's maximalist rhetoric have prevented a full-scale breakout. Japanese manufacturers are reportedly moving to Level 4 supply chain alerts, preparing for a potential total blockade of the Gulf if Friday's deadline passes without a signed accord. The peace rally is holding for now, but the volume suggests that the big money in Tokyo is waiting for a concrete signature before committing to the next leg up.